Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend's technical analysis update is for Monday, August 10th through Friday, August 14th, 2009. Well, we have a lot to cover today, folks, and I want to go over some key things that happen next week that may be setting up for a future move in the coming weeks. I also want to discuss a few key levels in this market that seem to be major in regards to where this market could come back down to or actually rally up into as major resistance and support. We want to talk about trendline analysis, price pattern, and time as being the major components of any day trader, swing trader, or long-term investor's book of tools. That's the bottom line, folks. You have to know all time frames, what's going to work for you, what's not going to work for you, and we're going to make sure to go over that today. All right, let's get started. What do we want to talk about first? Number one, let's talk about what happened last week. Last week, you had a nice little rally on Friday. Friday, the markets were up about 1.25% across the board in the U.S. The Dow was up 113 points, the Nasdaq was up 27, and the S&P 500 was up about 13.5 or 1.34%. Now, that really capped a generally positive week. We generally had a positive week, ending at pretty much the highest close for the week or the year, as a matter of fact. And that's very, very key here because you want to continue to watch what's being said from the government, what's being said from the Treasury, what's being said from the Federal Reserve, and from individual companies that have reported earnings. Now, generally, it's been a generally positive bias, but what I want to make sure you guys understand is that you have to look deeper than just the comments. All right, you don't want to be a silly kind of amateur investor and just listen to what's being said because, let's be honest, how many times has something that's been said come out to be wrong later on? Almost 90% of the time, generally. Remember, these guys have an ulterior motive. You have to be the due diligence worker behind the numbers. What is this number really saying when I delve into it? What is it telling us when all these companies are beating earnings per share, but they're missing on revenue? That has to be telling you something for the long term, which is telling you that they're cutting costs to improve earnings, not that they're growing their business. And that could be a trial down the road. So all this kind of stuff, I mean, that's really what we delve into here, guys. We're all about avoiding Wall Street hype, avoiding the media, and avoiding the comments from the government. Really understand what the technicals are telling you. What's trendline analysis telling you? Price pattern and time. All those are keys to the market. They don't lie, people lie. Bottom line. Okay, so let's get into it. Again, positive week last week. I want to get into the charts here. What you may be seeing here, and one thing I want to go over the last week is, while you had a positive week on Wall Street, I did feel that there were some major changes in character coming through in this market, and I want to discuss a few of them as we go back a couple days. All right, so let's go all the way back to really last week, going into about over a week ago now. The few changes of character really started last Thursday and Friday, a week ago from this last Thursday and Friday, so really over a week ago now. And those changes in character were that towards the end of the day, you started to see heavy selling going on. And you can see that going back to July 30th right here. On the 30th, a hard sell-off, 3 candles down on heavy volume. Notice the volume candles heaviest of the day. Then if you go to Friday, same thing, a little bit of selling into the close on heaviest volume of the day generally. That's a change in character because over the last 3 to 5 months, almost always, especially on Fridays, you saw the market rip higher on volume as you saw mutual fund players get in, 401k guys get in, and other players of the IRAs and individual investors jumping in the market late in the day to try and capture the following days, weeks' gains. Now, that was a beginning of a change in character. It's not a full-fledged change in character in the market, but a minor alert that we should all be paying attention to. Okay, so let's go back to this week. Now, what went on this week? What did I find fascinating about this week? Well, this week was kind of an interesting week, more so starting on Thursday and on Friday. All right, Thursday I found was a very, very important day this last Thursday because of this pattern. All right, now if you go back to previous months, previous weeks, previous days, the market seemed to bottom out around 10:30 in the morning, and then you'd have higher lows and higher highs put in. All right, and if I can drag this back, we can talk about, let's go back to Wednesday. Wednesday's a good point of this. So last Wednesday, you had the market selling off into the 10:30, 11 o'clock time frame, which is a key time frame when we're talking about price pattern and time. And this is all stuff that we reveal in our research center, which is guidance, stock picks, ETF picks, market picks, and major levels, all the major levels you need to know about stocks, ETFs, markets, oil, gold, the dollar, you name it. We talk about it all. But long story short here, I want you to focus on this hard down move here on Thursday. And then really what happened, on Wednesday, and then really what happened here again was the activity that we had this move down and then higher lows. Look, here's a higher low right here with a higher high, higher low, higher high, higher low, and then the market was able to rebound. And then you still got that little bit of selling into the close on heavy volume as institutions look to unload there into the small investor, okay? So again, notice that pattern. Now, the interesting thing about it was on Thursday, you had the opposite of that. And this is another change in character that we're not used to seeing in this market, where you had an open gap up, and then a hard sell, and then a bounce. This is a high-low, a lower-high, a lower-high, lower-high, and again, you had basically a double bottom and then made a lower low down here. So these are little changes in character. Granted, the market still wasn't down that much. It was only down 25 to 50 points on the Dow for the day, but these are little things that need to be watched very carefully to see when they start to sway the seesaw. Remember, a seesaw is angled one way right now in the favor of the buyers. That's the bottom line. That's why we've been going higher. The buyers, the longs have been winning the battle, but you're starting to see little cracks in the ice, if you will, and what you're really wanting to see is what major levels do we hit in this market to have a reversal where the market maybe comes back in, and how do you capture that, and how do you nail the top, okay? Now, the interesting thing about Friday was a fantastic day. A couple reasons why. Because you gapped up on the jobs number, you had a hard sell-off right to one of our major trend lines right here, as you can see. And by the way, these levels are the levels in that we give our premium members in the Research Center videos and our chat room, so you can get all these levels and understand where to buy and sell on the daily charts, weekly, monthly. This happens to be the intraday chart, 10-minute on the SPY. But again, you can see the pullback and then all of a sudden the short squeeze. Monster short squeeze, possibly an exhaustion move on the intraday here, all the way up. Consolidation, another move up. We went right into a major level, folks, and this level of 102 to 102.50 was what we called out in the Research Center previous days, just like the previous highs had been nailed for us at 100.85 to the penny. And again, these levels are very, very important. We give these out to our premium guys. I'll talk to you guys about them on the intraday. The daily levels, though, that's for our premium guys only. We'll never talk about those. But right up in this level, you have to know the level is in. And then you had a little bit of a pullback, looked like a bullish pullback, and then you started to make this mini flag pattern, which was bearish, pointed out by one of our pro traders in the chat room beautifully. And again, perfect call there as the market rolled over. Pattern again, inside bars, rolled over, and then sold into the close as heavy volume came in really pretty early here at 3 o'clock all the way to 4 o'clock. The market had a nice little sell-off. Granted, the market ended very nicely for the day. Very, very nice little move for the course of the day, up over 1% on the overall indexes. But again, changes in character. On a Friday afternoon in August, it's very rare you have a sell-off into the close. Very, very rare because the light volume, all the main traders, the head traders are on vacation for the weekend already with their families in the Hamptons, the Jersey Shore, Atlantic City, wherever they may go, Connecticut, Pennsylvania, whatever it is, they're already on their breaks. So to see that is very rare, another little glimpse of a possible change in character. Now, let's go on to what we have here, folks. That's what I wanted to really point out there. I found that to be very, very fascinating. But what I really want to go into here are your major levels and then what to watch for. Next week, what you're going to watch for is resistance upwards of this 102 to 102.50 level. If we happen to go back up there, that should be very, very significant resistance. You have a blue trend line and these crosses. See this purple line and purple line, how they nailed the exact top right up here. If we hit those again right around 102.50, that would be an excellent little opportunity for a down move off that level in our opinion. All right, on the downside, what you're really going to look for is continued selling on Monday. See if we continue this fall, maybe get a little bounce and then continue it. What type of flag pattern do we make off of this? And again, all this stuff can be taught in our Research Center. We teach it in our Research Center and our chat room and our webinars, which is going on actually as we speak. My partner is doing a webinar for many, many great possible new traders and investors and long-term traders and long-term investors. All right, on the downside here, again, guys, what we're going to watch is if we start to pull back, watch for the double bottom here, gap window on next week. That will be support right around this 100.50 to 100.40 level. And then if we get through that, watch for gap fill right down here around this level, which happens to be about 99, 90 to 100 even number. This will be a big level, 100 even number. You watch for us to take that out on the downside. All right, those are key levels to watch. What I really want to focus on is the 60-minute chart. 60-minute chart here, guys. Resistance, you can see the gray lines also coinciding with the top up here. If you're connecting this high with this high, look at how that nails the high perfectly from Friday. This is all technical trendline analysis, something that if a trader or a long-term investor doesn't utilize, whether it's the daily charts, the weekly charts, the monthly, or the intraday, you're really doing yourself a disservice, I have to say, because you'll be able to tell when the shorting opportunity was or the buying opportunity was based on that. For instance, look at this line right down here. Right down here, folks. definite hit right here, and look at the bounce up. And now if you come down to that gray line over here, that could be a possible buying opportunity for a nice little jump back higher. You have to understand your charts. You have to understand how you do all this stuff. So all this stuff very important. But on the 60-minute chart, again, 102 to 102.50, going to be good resistance tomorrow. If you come down and take out 101, then you have a decent probability of falling to the 20 moving average at 100 spot 50, then down to 100 to 99.90, and then actually you have another level at 99.50, another level at 99, and then actually all the way down to 98.60, and then all the way down here to 98, and then 97 would be your master support. That would be an excellent support line at 97 on the downside. If you continue up and resistance is broken at 102 to 102.50 and you close above 102.50, then there's another key level a little ways above it that will be an amazing possibility of a pullback area in this market. But again, guys, the one thing I want to stress here is watch for change of character. This is very, very big. The fact that we're seeing cracks in the ice. It hasn't cracked yet. You haven't fallen through, but you're beginning to see this. The question is, where does it turn? Where do we have a little bit of a pullback as this market remains very, very overbought? All right, folks, have a wonderful rest of